Hello everyone, very good afternoon and welcome to ACE Online. So you all know that we are having a marathon session for related to gender studies, right? So we have done with geography, polity and then reasoning and other topics also, so current affairs also going on. So in this session, we are going to see the questions related to the economy, okay? Before that, before going into the discussion, we need to know how the questions are coming, right? So as we were discussing in geography also, our intention is not just about solving the questions, rather our intention is to make you aware what are the areas which most of the questions will come from, right? So based on that, in the last minute, last moment, last few days, you can just revise your content, right? So in economy, we are getting less question from static, around 3 to 4 question we will get from economy, okay, static part. But economy questions related to current affairs, you will get current affairs of 15 questions, around 10 to 15 questions. In that they will touch more of current affair questions like budget or maybe some scheme related, some agriculture related data, any ranking. So we have already given you the current affairs magazine. You can directly download from the AS website itself. We have given from May onwards we have given the magazines. In that specifically you can focus on the economy also, right? So I have taken some questions from current affairs as well, but yeah, we will touch most of the areas which are very frequent in this SSC JE examination, okay? So I hope everything is clear. Now in case of any doubt and all, you can just post your comments also in the comment section, okay? So let's start with the questions. As usual, like yesterday, we'll give some time, okay? So then 10-15 seconds time we will give and then try to solve the question, then we will have the explanation also, okay? I hope everyone are ready. Okay, yes. So first question, a company deciding production based on customer demand. So a company is producing goods based on the demand. Represents which type of economy? So the question is from various types of economy: non-market economy, planned economy, market economy, traditional economy. So now you can answer. So take very simple questions, take 10 seconds and try to answer the question. What is the answer for this? So we have 3 kinds of economy. I think no answer from anyone. Okay, let me explain. So there are total 3 kinds of economy in terms of production, okay? First, market economy, then non-market economy, and then mixed economy. So these are the based on the production, who are the producers. So based on that we have a 3 kinds of economies. In case of market economy, the goods and services are produced by private players. That means not government, companies, private, and this is based on the market demand. For example, iPhone is there, so huge. You might have seen in Mumbai recently when they are opening iPhone 17, there was a huge rush. So the production happens based on the demand and supply, right? So that means based on the consumer demand, the goods will be produced in the market economy. In case of non-market economy, companies are not allowed. Rather, the production of goods and services are done by government itself. So government itself will do all the business, like Russia, China used to be done in the early years after their formation. And then mixed economy, where both government plus private. So some sectors are taken over by government, like in India you see railways, it is undertaken by government. So it is not, private players cannot increase their prices and all by producing new railway lines and all. It is completely in the government. Space as well. But also we have a private players like Reliance, Adani, Ambani's. So we have a lot of private players as well. So these are the 3 kinds based on the production. Now based on that, tell me a company deciding to production based on the customer demand represent which type of economy? Very good, one person has already answered, that is market economy. Good, Sai Teja, right. Next question. So economic questions are very simple. I have not taken a higher level also. It's very easy, basics only they are asking in SSC JE. So you should be able to handle at least these questions. So if you get an edge over these 3-4 questions, you will have upper hand over the other scores, right, other student scores. Next, which activity is part of the secondary sector? Cultivation of cotton, spinning of cotton into yarn, insurance service, university research. Out of these 4, which one are part of secondary sector? You can start answering the question. I'll explain anyway and then I'll take up this. So first, based on the activity, we have seen 3 kinds of economy. Now based on the activity, we have 3 sectors. Primary sector, okay, then secondary sector, and then tertiary, or also called as service sector. These are the 3 major classification. Above that, we have 2 more classification of economy based on the activities, right? Quaternary sector. I'll explain you all this, okay? Quaternary sector and then quinary sector. So these are the major 3 kinds, and after that we have 2 more. So in primary sector, the goods produced are directly collected from earth. So there is no involvement of any process. We can directly collect from the earth. What are all you can collect directly from the earth? Agriculture. Within agriculture we have fisheries, we have cattle, we have fisheries we have already told, forestry and logging like cutting the wood, and then mining also. Mining is also done directly from the earth, right? So these are all the, remember the definition, let them give any examples. Primary means which can be directly collected from the earth. Those are called as a primary. And secondary involves the processing. That means whatever we have collected from the primary sector, we are processing them, we are changing. For example, the wheat is directly collected from the earth, and if we process it to make a bread, so it involves processing, so it is part of the secondary. Tertiary means there are no physical goods, rather it is a service. For example, there is a Taj Mahal, you cannot go and take Taj Mahal, you can visit and experience the pleasure, so it's a kind of service, right? So software, all this comes under the tertiary sector. Then these 2 areas in recent exams they are touching, because many of the students know these things. Quaternary sector involves knowledge based. For example, I am transferring my knowledge to you, the students, so it involves a knowledge transfer. Wherever there is a knowledge, then it is a quaternary sector. Research and development, PhD, all this comes under the quaternary sector. Then we have quinary sector, where highest decision making takes place. That means these are the people who takes the highest decisions, like Prime Minister heading the cabinet, ISRO chairman, all these are part of quinary sectors. Now you can answer this question very easily. Yes, few students have already marked it, very good. 3 students have answered, that is cultivation of cotton is primary sector, spinning of cotton into yarn, that means converting cotton into a textile is involving the process, so it's a secondary. Insurance service is a tertiary sector, university research is a quaternary sector. So answer is B. Good, 3 students have answered this question, right? Next question. So try to see, we are not just solving the question, it is not the intention to make you know something which is already in the various books. It is to make you understand the concept, and then through this MCQs you will gain some quick revision kind of session, okay? So we have discussed already all these kinds of economy, market, non-market, so I have already given this. Next question, when the price of good, any good, you take example, when the price of good increases, the quantity demanded decreases. That means if there they are asking that if this pen price is increasing and the quantity, obviously when the price increases you will try to consume less, right? The quantity demand decreases. This illustrates which principle? Very basic: law of supply, law of demand, law of production, law of returns. Let me explain you. There are two important law of demand and supply. Supply is done by whom? Try to apply it. Don't just mug up the things. Okay, just apply your knowledge. Who supply the goods? Producers. Who supply the goods? Producer. And who demand the goods? Consumers. Who demands the goods? Consumers. Now they are saying that price of good increases, so they are pointing to demand, right? So law of supply says that means this law of supply is from producer side, and for producer what they want? Higher price. So law of supply says that whenever there is an increase of prices, then there will be more production because they can get the more profit. So that is what the law of supply says. What about law of demand? From the consumer sides, assume from your side, you want always the lesser prices. So law of demand says that whenever there is a less amount of prices, there will be more consumption, more demand. If there is more prices, then less demand. So they are saying price of good increases, quantity demand decreases. Obviously this is from demand side. So the answer is law of demand. Okay, so very practical application based question. Good. Students have answered. Akash, Kishore, Shadow Monash, Sai Teja, everyone have answered it correct. Good. So very simple. We have already discussed all this, law of demand and supply. Next one, when the price of petrol, see I am not giving you just theoretical question, application based, try to understand when you are solving this. When the price of petrol increases and demand for car decreases, obviously when petrol prices shoot up to 100 to 500 rupees per liter, obviously nobody will buy the cars, right? When the price of petrol increases and demand for car decreases, petrol and cars are which kind of goods? Complementary goods, substitute goods, inferior goods, normal goods. Take 10-15 seconds time and try to answer this. What is the answer? Okay, so let's see various kinds of goods. These are combination goods, not alone goods. Okay, this is a combination. We have various types of goods. First, normal good. Normal good. Okay, so normal good means whenever your income increases, let's say you get into the SSC JE job in any services, MES or whatever, PWD, different departments. So when your income increases, then what will happen? The demand for this good increases, obviously in general case. So with the increase in income, there will be increase in demand for the good. Then those goods are called as normal goods, right? Then we have inferior goods. Inferior goods. So in case of inferior goods, when your salary, when you got a government job, right, now you are wearing 100 rupees, 200 rupees t-shirts, right, inferior. Now when you get your government job and your salary, you get salary, then obviously with the increase in income, you will shun these inferior goods. You will try to capture the branded ones. So with the income increases, the demand for goods decreases. Here demand increases. Those are normal goods. These are inferior goods. When prices increase, when income increases, your demand for this good decreases. Those are called as the inferior goods. Okay. So there are other goods called as complementary goods. Complementary goods. So in case of complementary goods, these are combination, complementary, two together. So that means these goods can be consumed together. They cannot be consumed alone. For example, you want to buy a TV. Obviously, you need to take the remote also. Without remote, you cannot use the TV. So these are called as a complementary goods. You need to consume them together. You cannot consume them remote alone, TV alone. Those are called as a complementary goods. Then we have substitute goods. Substitute goods. That means these goods are alternate. If there is no coffee, then you can go for tea, right? If there is no laptop, you can go for tab. So these are substitute. If not one, then other. Now, when the petrol price increases, the demand for car decreases. That means they are consumed together. So those are called as complementary goods, right? So Akash, Shadow, Monarch have answered this correct. These are what? Complementary goods. These are not alternate. You have to consume together. This is a previous year question itself from SSC JE, right? Way back. Next one, gross value added is calculated as GVA. Basically, they are asking gross value addition. Value of output minus intermediary consumption, value of output minus depreciation, market price minus subsidies, factor cost plus product subsidies, product taxes, sorry. So I'll explain you, don't worry, but try to answer with your basic knowledge. What is gross value addition, GVA? Let me explain you some by taking some example, then we'll come to the options. Let's say I am having a company which produce breads, okay, bread, wheat breads. So what I have to do, let's assume I have a bread company. I'm having a bread company. So what are the raw materials required? Wheat, then milk, right? So some other, okay, let's say there are two raw materials which are required, I can produce, okay. Now to produce the bread from wheat and milk, I need to use this raw material, then I need to use labor, right? Then I need to use a machine as well, which makes the bread. So whatever the cost that I incurred, let's say wheat and milk together I have bought for 20 rupees, okay, from the primary sector. The bread is a secondary sector, wheat and milk is a primary sector, right? So let's say for one packet of bread I got 20 rupees. Then I need to add my labor, people who need to deploy to work, labor, then machine I need to, current I need to, let's say for one packet I got 10 rupees. Now 20 plus 10, so my total cost is 30 plus 5 rupees tax also I need to pay to the government, GST let's say. So total I will sell this bread packet for 35 rupees, okay. But my value addition, what value I have added? This milk and wheat, this is value added by what? Agriculture sector, primary sector. My value addition is this 10 rupees, right? So that means my company has added 10 rupees value to this bread packet. This 20 rupees value is added by someone else. So if I want to calculate my gross value addition, that is the total price of the good minus raw material added, intermediary consumption. This is the intermediary. Raw materials, this raw material is not directly consumed by the people in this bread, right? They are consuming bread. So this is an intermediary to produce the bread packet. So I need to total value that I added, price or total value minus intermediary good. So that means 35 minus 20 if I get, then I need to remove my tax also, then I will get my value addition. So now you tell me the answer. With this understanding, remember this kind of simple questions they will ask you, but in an exam you will get confused. It's very easy to score marks in economy if you understand practically, okay. Yes, good, very good. So you understood, right? So the total value of output that I have, 35 or 30 rupees, exclude tax, let it be no tax, minus intermediary consumption, that is wheat and milk of what? Primary sector. So that is the answer A, GVA. Good. At least you understood after the discussion. Very good. Next one, which of the following is a production tax? Which of the following is a production tax? Sales tax, service tax, land revenue, GST. Again, I'll explain you. Okay. I'll explain you. Try to answer if you are aware of it. Okay, let me explain you. Let's say I am starting a business to produce t-shirts, cotton t-shirts. Okay. So I have a company and immediately I won't be able to produce. First, what I need to do? I need to get a land for it. I need to get a land, obviously, to my manufacturing unit. Then land I required. Then what else I required? I need permissions from the government, stamp duties which I need to pay. So all this land tax, permission tax or fees, then stamp duties, all these things I am paying even before the production. I have not yet produced any t-shirt, but still I am paying land tax, then permission fees and other things to the government. So these taxes which are charged even before the actual production are called as production taxes. So production taxes are the taxes paid even before the actual production of t-shirt goods. It is called as a production tax. Whereas after the production of t-shirt, I need to pay tax. For each t-shirt, let's say 5% GST. So those taxes after the production are called as a product tax. Product tax, not production but product tax. Okay, production tax, product tax, difference should be there. Also, let's say I am a small MSME, government is giving me some subsidies. Okay, you paid 15 rupees tax, I am giving you 5 rupees subsidies because you are a small business. Even before the production, they gave me back 5 rupees. Those are called as production subsidies. Production subsidies. Okay, that means I got the subsidy even before the actual production. Now, product taxes you understood, that means after the actual production of goods, you need to pay the tax. Now, after manufacturing one t-shirt for 100 rupees, I have paid 10 rupees tax, but government is giving 5 rupees back because I am a small business for every t-shirt. So they are giving the subsidies after the production. So these are called as product subsidies. Product subsidies. Okay. So we have learned production tax, product tax, production subsidies, product subsidies. Now you tell me, which of the following is a production tax? Very good, very good. Yes, sales tax, service tax, GST, all these are charged once after the production of goods. Land revenue is collected even before the production. Okay, so the answer is C. Good, right. Ashwin, Hari Krishna, Shadow, Monash, Sai Teja, everyone have answered this correct. Very good. Next one. What is a basic price? What is a basic price? You might be aware about GDP. Let me explain you the process. What is GDP? GDP is the total value of goods and services produced in the country. Produced in the country. Okay. So this is the total value of goods and services produced. So let's say in our economy there are no goods except 3. We are producing only 3 goods. Assume, just to make you understand how GDP is calculated. Let's say 10 tomatoes are produced which are 10 rupees each, plus 10 t-shirts 100 rupees, plus 10 slippers 200 rupees. We have thousands of goods. Government will collect all the data. They will multiply the prices. Simply we will get the GDP. So 2000 plus 1000 plus 100, 3100 is our GDP. Currently, what is the GDP of India? Around 420 lakh crores. I am just giving you how we are calculating the GDP. Okay, 420 lakh crores. Now, this GDP is calculated at factor cost or basic price or market price. So this GDP can be calculated, that is the total value of goods and services, can be calculated based on factor cost, basic price or market price. So in these three levels we can calculate GDP. Let's understand. Factor cost is the total value of goods excluding any taxes, any subsidies. We don't consider any taxes, any subsidies. We have discussed production subsidies, production taxes, product tax, product subsidies. Nothing are included. This is the GDP at factor cost. So that means plain value without any tax. Here let's say 20 plus 30. So this 30 is called as a GDP at factor cost. No taxes, production, neither product or subsidies of production or product subsidies, nothing is involved. In basic prices, we include production taxes, production, not product, production taxes and reduces production subsidies, because subsidies will be given back by the government for some reasons. So when we are adding production taxes less production subsidies, we are getting the basic price. So factor cost plus production taxes, not product, minus production subsidies, if we do, then we will get the basic price. And what about the market price? That actually we are calculating GDP based on market price. Not only production taxes minus product subsidies, but also we are adding product taxes minus product subsidies. So when we add product taxes and also minus product subsidies, then we will get the market price. I'm sorry. So now you answer this question. So basic price is equal to factor cost plus product taxes. No, product taxes is for market price. Factor cost, okay, plus production taxes minus production subsidies, correct. Market price plus production subsidies, no, not related. Market price, this is also not related. So answer is B basically. Very good. Hare Krishna, Shadow, RRE, Sai Teja. Right, very good. So you understood a little bit more concept. I thought you won't be able to follow this. Okay, very good. Why is GDP preferred over NDP in most countries? Very simple. Depreciation is easy to measure. GDP is cheaper to calculate. Depreciation data is difficult to obtain. GDP is not used for international consumption. So let's understand GDP we have already calculated. GDP is nothing but NDP, net domestic product plus depreciation, or you can take it opposite also. Net domestic product is equal to GDP minus depreciation. Depreciation means what? It is a used value. For example, I have bought my cotton spinning machine in 2020. Okay, spinning machine, and for every year, let's say in 2020 the spinning machine capacity can be produced, new machine, it used to produce 100 t-shirts, but in 2021 it cannot produce 100. The quality of machine may reduce, they may produce 99, next year 98, next year 90 only, because the machine is getting older. So that value which we are losing because of the machine getting older is called as a depreciation. Okay, so this is the relation between GDP and NDP. Now you tell me why GDP is preferred rather than NDP. Okay, NDP is nothing but we calculate GDP and reduce the depreciation from it. Yes, very good, very good, very good. I'm very happy. So the answer is depreciation data is difficult. We cannot assess exactly how old the machine is. In 2020, it may produce 100 t-shirts. Sorry, next year the quality may reduce, but how much quality got reduced? That we cannot able to assess. So that's why depreciation data is difficult to obtain. That's why we don't calculate NDP. We calculate the GDP directly, the total goods and services values. Okay, so answer is C, right? Good. Next one, which of the following is an example of intermediate good? Which one is the example of intermediate good? Mobile phone, still used in the car manufacturing, laptop purchased by a student, milk bought for home consumption. So based on the consumption, we have three kinds of goods. First is raw material, then intermediary good, and then we have final good. Let's understand the definition first. Raw material means those goods which can be used in the further processing. Wheat collecting is a raw material for bread industry. Intermediary good means those goods which are produced from raw material, but we cannot consume them directly. We have to use for further processing. For example, a rubber tire, car tire. We cannot directly use car tire anywhere. Just playing in the childhood, we may use it, but not for economical purpose. Rubber tire has to be connect to the car, then only it can be used. So those are called as the intermediary goods. Final goods means those we can consume directly. Directly we can consume them. Now you answer the question. Right. So 4-5 people have already answered. Very good. So that means steel, we cannot consume steel directly. We have to use in the car manufacturing. Right. So correct. So answer is B, steel used in the car manufacturing. Okay. Next one, which committee? This is linked to the history a bit and also economy, because railways, when we discuss the budget in the class also I have in the class also I have discussed this particular history before we go into the budget. This is a fact, there is no concept. Which committee recommended the separation of railway finance from general finance in 1921? Ackworth Committee, Bibek Debroy Committee, Kelkar Committee, Rangarajan Committee. This is a fact, no concept as such. So the answer is Ackworth Committee. Let me explain you brief thing. Before 2017, in 2016-17 financial year, go and watch the YouTube video of budget in 2015. First, finance minister will get up and will read the budget. Then after 1 hour, the railway minister will stand and announce the separate budget for railways. This separate railway budget was proposed in 1921 based on the recommendation of Ackworth Committee. So Ackworth was a British person. So this committee, because during Britishers, railways has the huge importance. So that's why separate budget was announced for the railways. But in 2016-17, government felt that railway budget has gone to very less, 5%, 6%. So that's why they appointed the Bibek Debroy Committee. For what purpose? To study whether we require railway budget or not. And finally Bibek Debroy Committee that said that remove the railway budget. There is no need of any separate railway budget. Let it be merged with the normal budget. So since 2016-17 we have only one budget. Before that we used to have two budgets. So answer is Ackworth Committee. Okay, this is a factual question. You can see I am just displaying the budget evolution. You can just go through that first budget, all the facts. No need to I don't want to spend time on this. You can just pause the video and you can just go through all the facts. This one as well. Evolution of the budget, and most number of budgets were presented by Morarji Desai. Okay, so that is about the budget related. Next one, again conceptual one. Sorry, which of the following best defines the revenue receipts? I'll discuss the concept, don't worry. Revenue receipts, just go through it. I'll discuss the concept and then I'll ask you the question. Meanwhile, you can post your answer if you are aware. So let me discuss about the budget components. Budget. What includes the budget? Expenditure. See, whenever you are going for coaching to some city, Hyderabad or Delhi, what you will plan first? With your parents, you discuss about your expenditure. In this next 1 year, I am going to spend this much amount for my books, for my coaching, for my hostel fee. So you will plan your expenditure. Then you will plan the money that you need to get from your parents. Let's say your expenditure is 1 lakh. I'm just giving you practical example. 1 lakh you required for the expenditure of 1 year, but your parent says that they can give only 80,000. They don't have money, so they can give only 80,000. Okay, but 1 lakh is mandatory. You cannot reduce it. This is the bare minimum, right? So 80,000 you got from them. Now you need to get 20,000 extra. 20,000 extra from your friend. You will say to your friend that please give me 20,000. I'll give after getting into the job. But your friend says that they have only 15,000. Okay. Still you need to get 5 more thousand. So what you have done? You have sold your smartphone, which was you bought for 10,000. Now its value is 5,000. So you sold your phone. You don't want this phone during the preparation. So you sold and you got the 5,000. This is how you have planned your budget. This is the expenditure. This is the total money that you need to match your expenditure. All these are called as receipts. Receipts, expenditure, receipts. In this expenditure, we have revenue expenditure. Revenue expenditure. This is a capital expenditure. Okay. So this capital expenditure, let's say out of 1 lakh, you have spent 60,000 on your coaching for your classes, the fees. So this is going to give you the government job. That means it is going to benefit you in the future. Rest of 40,000 is for your hostel, whatever, like recreation, when you want to go for movie, those 40,000. That means you are not going to get any benefit out of it. But it is required to get good scores and all. You need to stay in hostel and all. But this is a core one which is helping you to get into government job. This is the capital expenditure. This is the revenue expenditure, which is one-way payment. You won't get any benefit. So government, like schemes money, subsidies or pensions, they are not going to get any revenue from it. They are going to just give the free money. They are not going to get any more from this revenue expenditure. So those are all part of revenue expenditure. And what about capital expenditure? If government spends some money on constructing a road, they can keep on collecting the tolls for many years. They will get some, now they are spending, but they'll get the money in the returns in the future. Those kind of expenditures are called as capital expenditure. Now coming to the receipts. Again these receipts are divided into revenue receipts and capital receipts, same like capital and revenue. Revenue receipts means those money which government is getting, no need to pay back to anyone, it is their own money, like taxes, income tax, all those taxes government will get, GST, no need to pay back to anyone. And capital expenditure, they are getting now, but they need to pay back in the future. Take example of this, 80,000 which you got from your parents is the revenue receipts. You no need to give money back to your parents, it is their duty to support, right? This is your own money, you can spend, like government taxes, they can spend their own. And 20,000 you have bought 15,000, it is a debt. You got the money, it is a receipt, you are getting money now but need to pay in the future. So government, if they bringing the loans, okay, those need to be paid back in the future, those are called as the debts. So debt capital receipts, these are capital receipts and this to debt. And this 5,000 extra, you sold your watch or you sold your phone, you no need to pay back, but you lost the asset, that is also part of capital revenue. Even though this is a debt capital revenue 15,000, this 5,000 you lost the asset. Government is selling Air India, they got the money but they lost the asset. So those are part of the capital receipts. So from this area you can expect a question. If they touch the conceptual topic of budget, they can give any kind of these examples. Now, is this clear? My question, is this clear to all of you? If yes, please comment, then we will solve the question. Else I can repeat, because this is a wide area sorry, where they can ask the question. Okay, I'm having some thought problem, don't mind. So is this clear? Please comment. Just go with this example that I have given. Okay. Okay, now let's solve the question. Which of the following best defines the revenue receipts? They are asking about this revenue receipts. Receipts that create liability. Is this 80,000 creating liability on you, your parents' money? Receipts that reduce government assets. Is it 80,000 reducing your assets? No, your mobile phone is reducing your assets. Then receipts that neither create liability nor reduce assets. Good. Receipts that must be repaid later. No need to pay back. Revenue receipts are one way, receipts no need to pay back to anyone. So answer is C. Very good, very good. So few people have already answered it. Correct. Right. So in this area itself we have 2-3 questions. So we'll try to solve all those questions. Now for this the answer is C. For next one, the primary purpose of customs duty. We will get more questions on budget. Let's see. Let's wait for it. The primary purpose of custom duty. What is the primary reason for primary purpose of the custom duty? To encourage foreign goods, to reduce government income, to regulate import and protect domestic industry, to tax agriculture income. Very simple. So what is a custom duty? Let's say this is India, this is India, this is America, China, other countries like Europe, Germany and all. So custom duties are the taxes collected when our goods are going out or other goods are coming in. So any borders, if some goods are coming into India or goods going out of India, if we tax those, then those are called as a custom tax or custom duty. Why we are charging? If goods are coming into India and we are taxing charge, so that means we are reducing the competition for Indian markets. Or if we are not allowing our goods, we are charging the goods that are going out of India. So let's say if onions are less in India and if they are going, because foreigners are paying more money and most of the farmers are sending to other countries, but we are struggling. So in that case also we can charge the tax. So to encourage foreign goods, no, custom duty don't encourage foreign goods, actually it discourage. Next, to reduce government income, no, government actually increases by collecting the custom duty. To regulate import and protect domestic industries, yes, this is correct. So as the Chinese toys are very cheaper, we are levying tax on them, custom tax, so that our toys will be promoted in our country. So answer is C, not agriculture income and all. Okay, so good, right? Most of you have answered right. Next, internal borrowings include what? Internal means within borders. Okay, if we go beyond our borders, World Bank and all, those are external. Internal borrowings include what? Multilateral loans, bilateral loans, treasury bill market loans, grants from foreign governments. Tell me, what are internal borrowings? Now, we were discussing about your example going for coaching. This 15,000, now it is an individual, but for country, if we consider a country, this 15,000 which you required, which you extra required as a loan, you want to pay back in the future. Government, if they are taking this loan within our Indian borders by giving bonds, you take the bond now, give money for us now. In future, we will take back our bond, we will give you more money, some extra money. That is the internal debt. External debt means taking from money from the beyond our borders, like World Bank or from other country like USA. If they are taking from international organizations like World Bank, IMF, those are called as a multilateral loan. If they are taking loans or money from country, a single country, it is called as a bilateral loan. And some countries can give freely money, like USA is giving 10,000 crore freely, no need to pay back. Those are called as a grants. Now you tell me this question, internal borrowings include what? Correct. So that means treasury bills are market, T-bills are bills issued by government, bonds, and they are taking money for short term, market loans long term. Okay, both are taking money within our borders. Multilateral from World Bank, IMF, so this is not internal. Bilateral means USA, Germany, this is also not internal. These are grants, so not borrowings, right? Free money. So these are the answer, C. Okay. Next, at present, treasury bills in India are issued for how many days? 30, 60, 90, 120, 240, 360, 100, 200, 300, 91, 182, 364. Very popular question, previous year question. What is the answer? So understand, T-bills are the short bonds. Short term means, in economy, short term means within 1 year, 1 year or less than 1 year. Long term means more than 1 year, that means 5 years, 6 years government take loans. So treasury bills currently they can released into the market. You can also buy T-bills. Let's say I have bought T-bill for 1,000 rupees. Okay, government will give something else, 1,010. Actually, these are no coupon. So that means if let's say T-bill is the value of 1,000, I will buy in the auction for 900 rupees. After 3 months, government will pay back me 1,000 rupees. So 100 rupees I benefited. Understand, T-bills are like a bond issued by the government. Now the T-bill value is 1,000, but I have bought it for 900 on January 1st. On April 1st, government will give me 1,000 rupees. So 100 rupees. It is not an interest. rather it is they are giving in a discounted price and they are giving the final value, face value of the bond to me after 3 months. These are the T-bills. So currently these are issued for 91 days, 182 and 364. So it's a short term bonds. Answer is D. Okay. So this is how market loans means long term. Next one, which of the following is a non-debt capital receipt? Understand, we discussed capital receipts here. Understand the concept capital receipt. Okay. First understand capital receipt for a second, 10 seconds. Then we'll go back to the question. What are capital receipts? Capital receipts means those money received by the government today but need to pay back in the future, like loans. One, also it includes non-debt. That means by selling off Air India, they are getting money but they are losing the asset, right? So capital receipts include debt or non-debt. 15,000 is your debt from your friend, 5,000 you just sold your mobile, non-debt capital receipt. Now answer the question. Which of the following is a non-debt capital receipt? Corporate tax, interest receipts, disinvestment proceedings, excise duty. Answer this question. Which one is a non-debt capital receipt? RRE 6872. Very good. It is disinvestment proceedings. Disinvestment is what? Investment means spending some money to return back, to get returns from it. Disinvestment means selling off the asset. Selling off assets. We are giving away. Let's say ONGC is a government company. If it is sold to the private players, it is called as a disinvestment. So disinvestment proceeds are non-debt. They are not debt, but we are losing the asset in the process. Okay. So answer is C. Very good. One student have answered. Very good. These are tricky questions where you can get edge over others. Same thing. So the definition is related to disinvestment. Now tell me, disinvestment refers to increasing government share in the companies, reducing government ownership by selling assets, collection of taxes from industries, borrowing from international bodies. Tell me what is the answer? Yes, have already answered. Very good. So very simple question we just discussed. B. Next one, which of the following is a feature of revenue expenditure? Go back to the discussion. Revenue expenditure, that means spending money which will not give any returns in the future. Those are called as revenue expenditure. Now solve this. Creating long-term assets needs to be repaid, used for day-to-day functioning of the government from government perspective, not from your perspective. Generates future income. So what is this? Very good. Thank you, Nazreen. So I told you revenue expenditure means what? Spending money which will not give any money back, returns. When government is spending day-to-day money on day-to-day basis, like giving salaries, maintaining cars, all these will not give any returns for the future. So answer is C. Okay, good. Most of you have answered. Next one, which of the following is an example of capital expenditure? Capital expenditure means we just discussed, spending now will give back money in the future, like constructing a road by the government. Okay, salaries for teachers, purchase of machinery, interest on loans, subsidies to farmers. Yes, good. Why C, Sai Teja? It should be B, right? When we are buying a machine, let's say any machine like textile machine, keep on producing textiles every year, we will get the money from it. Subsidies to farmers is the one way, we will not get any. Interest to loans, if we are paying interest for the loans taken, it is not giving any money back, right? Salaries for teachers also not coming back. It is a purchase of machinery. Okay, so answer is B. Next one, physical deficit represents. First let me explain you the definition, then I'll after that we can solve. Going back again, so your total expenses that you planned for your coaching is 1 lakh, but your father is giving 80,000 and you sold your mobile 5,000. You cannot sell anything else, you don't have anything else to sell, right? So what you need to take extra as a debt? 15,000. So in that 1 year you need to take 15,000 as a debt. Government also plans first its expenditure, total how much we need to spend in this 1 year, salaries, road construction, everything. Then they will sell their assets like Air India, they can get some revenue. After that they have to plan the extra debt. So physical deficit means whatever extra government has to borrow in that 1 year is called as physical deficit. So 15,000 is your physical deficit in this process. So whatever you have to take away this 5,000, it is not a deficit, you lost asset, that's it, but you are no need to pay back. So physical deficit is the money that need to pay back by the government in that one financial year, not 2-3. This year we bought, next year also we bought some money, and then so that is called as the overall debt. But physical deficit means extra money that you borrowed in that 1 year. Now answer the question. Physical deficit is very important, it's a very popularly asked in the exams. Governments need to borrow excess of revenue expenditure over revenue receipts, reduction in government assets, total outstanding debt. Now tell me. Right, Hare Krishna has answered correct. Right, good. We just discussed that physical deficit means what extra government need to borrow. You have borrowed 15,000 from your friend that need to pay back. This is the what you have borrowed, right? So answer is A, correct. Nazreen and Hare Krishna have answered this correct. A, physical deficit. Next, tax related one, an ad valorem tax is levied on the basis of. Let me tell you the tax basis. Tax can be charged. Tax can be charged based on value or number, goods numbers. That means for 10 goods 10 rupees. So for 1 good 1 rupee. So it is number of goods, and if it is charged on value, that means for every 100 rupees you need to pay 1 rupee. So when they are charging based on the value, it is called as ad valorem tax. Ad valorem tax. When they are charging based on the numbers, let it be 100 rupee, 200 rupee, does not matter. For every good you need to pay tax. So that is called as specific tax. Specific tax. Okay. So ad valorem means based on the value of the good. Specific tax means based on the numbers, not on the value. Now tell me, ad valorem tax is levied on the basis of quantity of goods sold, quantity, numbers, weight or volume of the goods, they are saying weight or volume of the good, assessed value of the product or property, number of units purchased. I explained you two kinds of broad classification of how we can collect the tax. So Sai Teja has answered this C, good. Any other answers? Right, Hare Krishna also C, yes. So based on the assessed value, if we charge, then it is called as a ad valorem tax, based on the value of the good rather than the number of good. Okay. right? Next one, capital gain tax is what? What is capital gain tax? They are asking. Is a tax. Interest paid on loans, profit earned from sale of assets, transfer of goods across states, consumption of goods. Let me explain you one process. Then you will understand what is capital gain tax. Let's say in Hyderabad, I have bought 1 square feet land, let's say 10 square feet land for 1 lakh rupees. 1 lakh rupees. AC. Okay. So I have bought 10 square feet land for 1 lakh in 2020. Okay. Then government announced a metro line nearby my land. Metro line nearby my land. So the value that I bought is 1 lakh. But after the announcement of the metro line, the value got for 10 lakhs. This 10 square feet went for 10 lakhs. Okay. This 10 square. Earlier when I bought it for 1 lakh, after metro line it got 10 lakh value. Now when I am selling it back to other person, I bought in 2020, in 2025 I am selling it for 10 lakhs. I have bought it for 1 lakh, but now I am selling it for 10 lakhs. So I got 9 lakh profit. Capital gain. Capital means asset. Gain is 9. So now government will charge 10% tax. So this 10% tax on 9 lakhs is called as a capital gain tax. So when I got some profit when I am selling back my asset, it is called as a capital gain tax. So 9 lakhs here which I earned, I spent 1 lakh but got 9 lakh profit. That is called as a capital gain tax. Now you answer this question. Very good. Profit earned from sale of assets. Correct. So answer is B. Good. Well, next one. GST is classified as what? GST is a direct tax, indirect tax, progressive tax, regressive tax only. So tell me, what is the answer? Okay, so let's explain the direct and indirect tax. Suppose government is directly collecting from the tax source. Tax source means from where the tax is collected directly, then it is called as direct. If government is not directly collecting, rather third person is involved. That means this person is collecting from this person and then paying back. For example, income tax. My salary, whatever I am earning salary, I am directly paying to the government. It is a direct tax. And if I buy a pen, I am not directly paying to the government. I am paying it to the shopkeeper. Shopkeeper transferring back to the government. That is called as the indirect tax. Okay. Now whatever GST that you are paying, GST for your t-shirt, for your restaurant, for your whatever the source, you are not directly paying to the government. Rather you are paying to the intermediary and thus that person is charging back to the government. So that is called as indirect tax. So GST is a indirect tax. Very simple, right? Correct. Very simple question, no need of explanation also. Next one, which of the following is not one of the 4 powerful engines of development identified in the budget 2025-26? The term is missed. So this year budget, I have not taken questions, lot of questions. You can go through ACE online channel. I have discussed the whole budget of 2025-26. It's around 1.5 hours. So just go through it, you will get a question. So I just taken one question from it. I'm not discussing the budget here. It takes a lot of time. Just go through the video in ACE online, you will get it. So there are 4 themes identified by the government in this year budget. Which one is not one among them? This is a fact, no concept. So it's your duty. I no need to put efforts. It's a fact. Correct. So one student, Hare Krishna. So you might have prepared this. Very good, Hare Krishna. So you can see the 4 themes given by the government in this year budget: agriculture, MSME, investment and exports. These are the 4 engines that they are going to take our economy forward. There is no tourism here. So D, very good. Nazreen as well, 2 people have answered correct. Next one more budget question. The Prime Minister Dhan Dhanya Krishi Yojana aims to cover how many districts in phase 1? This is also announced in the budget 2025-26. So government has selected certain districts which are most backward in agriculture, not in terms of development, rather in terms of agriculture. Whatever the districts are lagging behind, like low productivity, less farmers are involved, less capital are involved. So how many districts are selected for the development? Correct, C. So I think good, many people have prepared the budget, Akash, Nazreen, Harikrishna. So government is going to select 100 districts and they are going to develop. So some budget questions. Next, one more question from budget. Where will be the Makhana board? Makhana is a superfood, that means it has a high nutrients. Where will be the Makhana board established to support production and value addition? Uttar Pradesh, Jharkhand, Bihar, Assam. Again a fact. This state is the largest producer of Makhana, that's why they are going to establish. For example, recently National Turmeric Board was established in Nizamabad, Telangana, because Telangana is the largest producer. So that's why they have chosen that particular state. So here also Makhana board, they may directly ask you which is the largest producer of Makhana. That is also same answer. The answer is C, Bihar, correct. So Bihar is the largest producer of Makhana, that's why they are establishing the value, support and production value addition in this region to, Makhana board is being established to promote the production of value of Makhana. Answer is C. Next one, a loan becomes a non-performing asset. So the question is about non-performing asset. When the principal or interest remain overdue for how many days? Let me explain you what are non-performing assets. Let's say I have a bank, let's say Bank Z. Whatever the loans that bank is giving, loans are assets for it. Loans are assets for the banks. Why? Loans now they are giving to the companies or home loan, they are charging interest. If I give 10,000 as a loan, I am charging 11,000 back. So I am earning 1,000 rupees through this. So loans are assets for the banks, right? Now, like Vijay Mallya, Mehul Choksey, people will take loans and they will escape to other country. They are not paying the loan back. So these are loans are assets, but when their interest or principal, the actual amount, if they are not paid back, then they are non-performing assets, because loans are assets and when they are not returning back to the bank, so those are not performing well for the banks. So those are called as a non-performing asset. So when is the deadline? So if you don't pay your principal or interest on how many days, then it is considered as a non-performing asset. Very good, Akash, Nazreen, Harikrishna have answered correct. Very good. 90 days. So you can see the table here. Loans are assets for the banks, and when they are paying regular, there is no delay, they are regular assets. If they are not paid up to 90 days, 1 day, 2 day, 3 day, 4 day, 5 day delay, 7 day delay, up to 89 days delay, they are called as a stressed assets. They are not non-performing, but they are stressed for the banks. Once they cross the 90 days limit of non-payment, then they are considered as a non-performing assets. And if it is within 1 year, then substandard assets. If it is more than 1 year, then doubtful assets. So these people are not going to pay. And if banks write on the books that we are not going to come back, the loans are not going to come back anytime, so those will be declared as a non-recoverable. So these are the non-performing assets. C, correct. Most of the people have answered. So you might have prepared this topic. Next, which institution in India uses inflation targeting as a key policy tools? We are going to have a lot of factual questions now. So it's very popular questions. Inflation targeting. So that means in India, we are targeting the inflation. Inflation means rise in prices that should not go beyond too much high or should not go too much low. Now, who is taking care of this inflation targeting in India? Niti Aayog, Ministry of Finance, RBI, SEBI. Who is planning the inflation? It is RBI. Our inflation should be between 2 to 6%. It should not go below 2. It should not go above 6. Why? Let me show you. I am having a company B producing shoes. I produced 100 shoes in 2020. Each shoe value is 100 rupees. So the total cost that I spend is 10,000 rupees. Now in 2020-21, in the one financial year, I sold 80 goods for 100 rupees. Next year, remaining 20 goods I sold at 102 rupees. So my cost of production for these 20 goods is same last year. But now I am gaining 2 extra rupees because of the increase in the inflation. So at least some inflation should be there in economy for producer side, so that they can save some goods in that year. Next year they can sell it for a little bit higher price. So that the business will run, they can get more profit. So government also want to support companies to do business so that they can earn some profit in next year. Also, it should not go too high, because if pen price is going from 100 rupees to 101, 102 or 103, you will accept. You will buy next year also. But if it goes beyond 106, 107, 110, you will reduce the consumption. You will, judicially you will use this pen so that you can buy less pens. So that's why not too high, not too low. They are supporting producers as well as the consumers. So that's why this inflation target is between 2 to 6%. They will ask you this also. 4 plus or minus 2. This is our target and RBI is taking care. Monetary Policy Committee is there. Okay, headed by RBI Governor. So answer is C. Right. Next, shareholders receive which type of return? For example, you bought shares in the market. That means in Infosys or MRF, you bought some share. Right? What you will get in return? You will get interest, you will get bonus, you will get dividend, you will get commission. What you will get? If you hold, share holds ownership. You are not buying bonds, you are buying the ownership itself. So what you will get in return? Yes, Akash is correct, absolutely correct. That is dividend, means profit. You are going to get the share of profit. Bonus you will, when you work in the company for 5 or more years, according to labor laws, you will get some bonus every year. Interest you will get if you buy the loan, or you have you will get interest when you got the bonds or you gave some loan to them, right? But if you buy the ownership itself, you will get the dividend, not commission. Commission is not at all relevant, right? So dividend we get. Profit, you are the owner, some part of company profit you will get it, that is called as a dividend. Next, treasury bills, municipal bonds, zero coupon bonds are examples of what? Equity shares, government bonds, debentures only, forex assets. What are treasury bills, municipal bonds, zero coupon bonds? Straightforward question. I told you treasury bills, there is a clue. Government gives a bond, take money, short term. So it is government bonds. Municipal bonds are issued by municipalities. For example, a municipality, Warangal municipality, want to develop a road or sewage. They will issue the bonds, they will collect the they will issue the bonds, they will collect the money from public, they will build the drainage, then they will collect the wealth tax, house tax and all, they can recover and they can pay back. Government issued. Zero coupon bonds are also means treasury bills only. That means there is no interest. Rather, you are buying at 900 and you are getting 1000 after the maturity. So there is no interest. So those are also issued by government. So answer is B. Correct. Next one, nationalization of 14 major Indian banks. Now we have come to the 5-year plans. Nationalization of 14 major Indian banks took place during which 5-year plan? First plan, second plan, fourth plan, fifth plan. Very popular question, previous year question. In which 5-year plan we have nationalized banks? So let me show you the 5-year plans. So I have given you 5-year plan and major, focus on agriculture, irrigation, Harad-Damar model. So you can see here all this, I have displayed. So you can pause the video, quickly you can go through it. This is up to 4th 5-year plan, then 5th 5-year plan, 6th, 7th. So we have 12 5-year plans. I'm not discussing everything, just displaying, just go through, pause the video, later you can just make a short, you can expect a one question from planning. 99% there is a possible from here. So you can see here nationalization, bank nationalization is in the 4th 5-year plan. So answer is C. It's a fact, no concept as such. C is the answer. Okay, 4th 5-year plan. Next question, one more. Annual plans in 1990, 1992 we got a financial crisis, right, were introduced due to. Why we have cancelled the 5-year plans? Why we introduced the annual plans? Political stability, foreign exchange crisis, food shortage, technological challenge. Correct, Nazreen. Hare Krishna. Yes, good. Few people have already answered. Foreign exchange crisis. That means, see, if you are buying petrol, we don't have petrol in India. We need to buy from the external markets. When we are buying petrol, you need to pay dollars. They won't accept rupees. So we don't have dollars that time. It got stuck because our country was more of import dependent. So our dollars got exhausted. So it's a foreign exchange crisis. Okay. So please go through all this. You can expect a question from this region, right? This particular 5-year plans, you can get a mandatory one question. Why you should lose this 1 mark? You can pass and make a short note before going for the exam. Please go through this. This is the 12 5-year plans. Next one, the proportion of people living below poverty line in total population is called as what? That means number of people out of total people who are in below poverty line is called as what? Gini ratio, Engels ratio, dependency ratio, head count ratio. Good. Hare Krishna, very good. Nazreen, good. So head count ratio. Head count ratio is nothing but poverty. How many people are in poverty? So that is called as a head count ratio or poverty. Very simple question. Right. Next, according to periodic labor force survey, this is a current affair. So you have to go through the current affairs economy also. Beyond these 3-4 questions, you will get some current affairs questions as well. According to periodic labor force survey 2023, what is India's unemployment rate for individuals aged between 15 and above? 15 to 59 is considered as a working age or labor age. What is the unemployment rate? I am just go through some important indicators. So recent report released by Ministry of Statistics. So total unemployment rate is 3.2, rural unemployment 2.5%, urban is 5.1%, male unemployment rate is 3.2, female urban unemployment rate is 3.2, labor force participation rate, total people, how many people are participating in the employment, 60%, rural 63.7, urban is very less 52, working age population, that means who are actually working rather than just allowing for work. So 58, male working population ratio 76.3. So all this data is important. Now what is the what is the unemployment rate? So there is no option, it is near one is 3.1, so it should be 3.2%. okay, unemployment rate 3.2. okay, so this is the answer. So there is no exact answer, anyway you need to choose the near one. Next one, which type of unemployment arises due to the skill mismatch? Skill mismatch, you all might be educated from BTech different branches, but most of you have not gained the practical experience required, practical skills that you can deploy. So we have people but they have less skills and it is not mismatching the requirement of the industry. In this kind of unemployment, you are all unemployed because of what reason? When you have a less kind of skills. Is it a frictional, structural, hidden, cyclical? Correct, Nazreen have already answered, very good. So when skill mismatch happen, then it is a structural unemployment. Please go through all kinds of unemployments. One more current affair question, which GST slabs were removed in 2025? Recently government, after Trump levied lot of taxes on India, government bought lot of GST reforms. So which layers were removed? Which GST percentages were removed? Yes, correct, Hari Krishna and Nazreen. 5 and 18% were removed. Currently we have only were largely removed. Yes, so we have only 12, what is the answer? Slabs were largely removed in 2025. Yes, 5 and 18 were removed. Okay, so we have only 2 slabs, either 12 or 28 or 0 also, right? So 5 and 18 were almost removed now. Okay, 5% GST were brought to 0 and 18 once were brought to 12, right? And luxury goods we have 28. So these 2 were removed. Next one, which state had the highest debt to GSDP ratio? Again current affair. That means which state has highest debt among all the states? Out of their total, GSDP means gross state domestic product, GDP means India's GDP, the national GDP. So which state has the highest debt? Anyone? This is a current affair. See, we have given you, AS has given you the monthly magazines. Please go through website or go to Google or check our Telegram channel. We have posted the current affairs magazine since May, and October and November also is getting ready. So within few days we will be posting, right? Anyway, you can just go through the magazines. The answer is Punjab. Punjab has the highest debt to GSDP ratio. Next, again current affair, which industry contribute the highest gross value addition? GVA we discussed in 2025 industrial data, this year data. Which industry has highest? Pharmaceutical, motor vehicle, basic metals, food products. Again this is a current affair. Why I am not even taking a lot of time to give you time is that most of you ignore current affairs as you are all technical students, but current affairs are very important, not only for your exam, for personality development also. Try to read newspaper regularly. So the answer is C, basic metals. Next, one more current affair. Which bank recently received RBI's in principle approval to transition from small finance bank to universal bank? Small finance banks means those only conduct a specific banking activities like savings, debit card and all, but now it can conduct any activities of commercial banks. This is a record. In last 10 years, this is the only bank which got this permission. So answer is AU Small Finance Bank. Okay. Next current affair question. Which country contributed the highest share of FDI inflows into India in 2024-25? FDI means what? FDI means investments made by the foreign companies in India. So which country has contributed the highest FDI? Anyone? Again current affair. Very good, Akash and Sai Teja. I am very happy. See, some people answering economy current affairs is a very pleasure to the economy, faculty, because again most of the people don't follow this. But yes, few students have answered. Very good. It is Singapore. You can see here. Singapore is the highest, then Mauritius, then USA. Top 3 countries. And our total FDI that we received is 81.04 USD billion dollars. And the large sector is service, then computer software, hardware. Okay, good. Next, few more static questions which can be possible in the exam. Which of the following is included in the gross domestic product? Value of goods produced within the country, income earned by the residents abroad, remittances from NRI, interest paid on government debt. What is the answer? Very simple question, direct question. We discussed also. It is the value of goods and services produced in the country. Goods and services also, but anyway, appropriate answer is A. Good, good. Nazreen, Akash, Sai Teja answered. Next, which sector contributes the highest to India's GDP currently? Agriculture, industry, service, trade. Again, very direct question. Which sector? Not agree, Akash. It is C. Yes, Shadow Monarch has answered. So our total GDP majorly service. 55%. I told you 400 lakh crores is our GDP. 55% comes from the service. Industry contribute 31% and agriculture just 14 to 15%. Okay, service sector 15, industry 31, agriculture is just 14 to 15. So answer is service sector. Good. Next, who among the following is a measure of inflation in India? So which is the indicator to measure inflation in India? CPI, Consumer Price Index, Index of Industrial Production, GDP deflator, Gross National Product GNP. The full form if you know, you can easily answer. The answer is A. Consumer Price Index. CPI is the calculator of inflation currently. Next one, the largest contributor to India's exports. Which exports are contributing highest? Factual question. Petroleum, engineering, textile and tea. Petroleum, we are the importers. We import lot. Not textiles, it is engineering goods. So again a factual one. Next one, which of the following is not a function of RBI? Which one is not the function of RBI? Direct question. Answer this. Bankers to government, yes. RBI is a bankers of bank. It acts as a bank for all the banks. Issue currency, yes. RBI issue lot of currencies. Control credit, yes. Control money in the market. They don't rate any banks. That is a private NGOs does. So answer is C. Okay. Next, how many crops are currently covered under minimum support price in India? MSP. MSP. How many crops are covered in MSP? Very popular question. MSP means what? Minimum support price. That means government will announce price if the farmers cannot sold at that prices, lower prices. I mean, farmers are getting low prices from the market, they can directly sell to the government. That price is decided by government. So currently it is given for 22 crops. You can just go through the crops also. Okay. I have listed it, 22 crops. I think last 2 questions, 2-3 questions we have. Balance of payments, yes, 2 questions. Balance of payments includes what? Visible trade transaction. See, balance of payments means the country trade with all other countries in the world, India with China, USA, all those, and the 1 year, within 1 year transactions are noted in current account, and a long term one is noted in capital account. You can see here current account, exports imports of goods, exports import of services, unilateral services, that is your friends working in America send back money, those are remittances. Income receipts, that means interest is paid every year, even though loan is for 5 years, but interest is for every year. Long term, borrowings and lendings, investment, FDIs, forex reserves, dollars. So what is balance of payments? Visible trade transaction, current account transaction, all economic transaction between residents and rest of the world. So answer is C, not current capital but all. Okay. Last question for today. What is repo rate? What is repo rate? Very again popular question, you might be aware. That means if banks want money from RBI, they can ask and they need to pay some charge. If SBI want money, they can go to RBI and they can ask money. This interest charged by RBI on banks is called as repo rate. So rate at which RBI lends to commercial banks. Very direct question. So answer is A. So that is about today's session. I hope you have enjoyed the session. Okay. It will however benefit somehow. Please go through all the questions. Okay. In case of any doubts, you can comment after this session also. I'll be replying. Okay. So this is all the very best from my side. And if you like the video, please like and share the video also. Thank you so much. All the best. Take care.